It is 9:05 a.m. Pacific Daylight Time. It's the 19th day of May, 2026, and this is episode 1324 of Bitcoin, and the White House has an announcement about the Bitcoin Strategic Reserve. Reminds me of the heady days of Justin Sun, who is the king of making announcements of announcements. He hasn't done so in a while, so I guess the White House has taken over the reins. It's me, your host, David Bennett, here on the Bitcoin and podcast. I'm bringing you all the news that you can use about Bitcoin and macro from around the world. Next up after that, Swan Bitcoin has found themselves in a little spot of trouble. They've been hit with a $1 billion lawsuit. After that, the SEC is going to propose tokenized stock framework. And I must remind you that at least on 3 separate shows over the last couple of weeks, I've talked about how AI companies in particular are saying, dude, unless you bought the stock from us or through an instrument that our board of directors has approved, you own worthless paper. So just, it's going to be interesting to see how companies and the SEC kind of collide with each other about what tokenized stocks actually are and who's approved them and yada, yada, yada. And then Japan's ruling party, there's a proposal to build an AI blockchain-based financial system. I'm absolutely certain that is not going to go anywhere. But the fact that they're proposing it may give us some insights into what the hell's going on in Japan, because as we see with the bond market, U.S. included in that, and by the way, the UK gilts aren't exactly performing the way that anybody wants them to, but Japan's 10-year bond, oh my God, it's just skyrocketing. So we're going to stick with Japan in the next story after the AI blockchain stuff. Extra budget is what Japan wants, including funding from fresh debt. And I'm not sure how Japan thinks this is going to help, because their bond market is already in free fall. Somebody get a rope. Anybody, please get a rope. We're going to need lots and lots of rope. In the second part of the show, Elon Musk has lost his AI lawsuit against OpenAI, which I didn't think that he was necessarily going to win, but I also didn't think that there would be a clear winner or loser this early in that particular lawsuit. We'll see if maybe we'll find out if he's going to appeal that. World Liberty Financial is going to be in the news. And then I got something out of Eric Balchunas, I think is how you pronounce his name, about some shitty ETFs. And it's just a reminder before we go into the TD Cowen story, they're raising their strategy price target. And then we're going to end with, Polymarket military bets. They're not going away. People are making a lot of money on insider trading in the Pentagon. Let's just put it that way. Okay, so White House says strategic Bitcoin reserve announcement is imminent. It's a breakthrough, and that's in quotes. Micah Zimmerman, Bitcoin Magazine, kicks it all off this morning. The White House is on the verge of a formal announcement on the U.S. Strategic Bitcoin Reserve. Patrick Witt, Executive Director of the President Council of Advisors for Digital Assets, told an interviewer this week that the administration has cleared a major legal hurdle in standing up the reserve. Quote, "We'll have an announcement. I wish I could say more. It's a breakthrough as far as getting everything in place, legally sound, properly safeguarding the assets." End quote. The signal follows a similar declaration Witt made at the Bitcoin 2026 conference in Las Vegas, where he told that crowd that an update was coming within weeks. Witt pointed to a breach at the U.S. Marshal Service as proof that the reserve security mandate is urgent. The government contractor named John Dagita allegedly stole more than $46 million in cryptocurrency from the U.S. Marshal Service custody accounts in late 2025, and the FBI arrested him in March 2026. Quote, "It's a case in point for why it was so necessary that the president established the SBR," Witt said. An executive order dies the moment a new president takes office. That vulnerability is the core argument for two bills now moving through Congress. Rep. Nick Begich recently rebranded the Bitcoin Act as the American Reserves Modernization Act, which would authorize the U.S. Treasury to purchase up to 200,000 BTC per year for 5 years, with holdings locked for a minimum of 20 years. If the Bitcoin Act passes, the Treasury's first open market Bitcoin purchase is projected for the fourth quarter of 2026, making the U.S. the first sovereign nation to actively accumulate Bitcoin as a strategic reserve asset. All right, so in this story, they talk about that particular issue of the U.S. maybe buying Bitcoin at the very end. But that's not what this announcement is going to be about. This announcement is more about how they're going to count how much Bitcoin they have, how they're going to store that Bitcoin as a whole, because right now the Bitcoin is broken up into several disparate parts through a couple of different institutions, like the Marshal Service has some, and I'm thinking the SEC probably has some, and you never know. The FBI might have some of their own, but they're talking about consolidation, regulation. They're not going to say a damn thing at all about them buying Bitcoin. I can promise you that. In this announcement that we are apparently on the verge of receiving and have been since the Bitcoin conference, it is not going to outline anything. It's not going to have any language in it whatsoever that points to a purchase of Bitcoin. That's the bet that I'm making this morning. So on to Swan Bitcoin, which is a much more interesting story. Swan Bitcoin has been hit with a nearly $1 billion lawsuit over the Prime Trust collapse. Logan Hitchcock, tell me more from Decrypt. Electric Solidus Incorporated, which operates as Bitcoin services firm Swan Bitcoin, was named as a defendant in a newly filed lawsuit in Delaware bankruptcy court that aims to recover nearly $1 billion worth of cryptocurrency linked to the 2023 collapse of Prime Trust. The suit, filed by PCT Litigation Trust, a trust that was created for the distribution of assets and litigation pursuit related to Prime Core Technologies, claims that Swan was able to avoid major losses in 2023 when the former crypto custodian was forced to shut down and file for bankruptcy, citing the firm's, quote, unrivaled access to inside information. The suit was first reported by Blockspace. Quote, Swan, unlike most of Prime's customers, did not suffer significant losses because Swan had insider non-public information. Swan knew to transfer fiat and cryptocurrency from Prime Trust immediately prior to Prime filing for bankruptcy to avoid catastrophic losses, end quote. Prime Trust was forced to shut down by Nevada regulators in June of 2023 after it was determined the firm was heavily in debt and unable to service its customers. That August, the custodian filed for Chapter 11 bankruptcy protection on account of its financial woes, with early regulatory filings indicated that it owed as much as $82 million to customers from missing fiat deposits. Prior to that bankruptcy filing, Swan was able to transfer nearly $1 billion worth of assets at today's prices, led by 11,992 Bitcoin, currently valued at around $917 million, that the suit alleges belongs to Prime debtors. While typically these funds could be clawed back based on a 90-day look-back period, also known as a preference period, The suit alleges that Swan took steps to circumvent that potential. Quote, upon learning non-public information indicating that Prime was on the cusp of bankruptcy, Swan recognized that offloading its entire business from Prime could expose it to enormous preference liability. Swan thus undertook efforts to shield itself from such exposure. That's what the lawsuit reads, anyway. The suit further details a key link in the firm's relationships was via a senior executive at Prime who, quote, also served as a compensated outside advisor to Swan. Uh-oh. According to the filing, hold on, I gotta highlight that so I can come back to it. That's the rub right there. According to the filing, this executive standing provided access to insider information, and the individual was responsible for initiating encrypted conversations with Swan CEO Corey Klippstein prior to meetings with regulators from Nevada. Quote, on May the 25th, 2023, in the midst of these communications, and just one day before Prime's meeting with Nevada FID, Swan notified Prime that it wanted to transfer its entire business from Prime, the filing says. The exposure stated in the filing includes around $22.4 million in cash, as well as $5 million in dollar-backed stablecoins, and God forbid, 91,000 XRP or $126,000 worth of the Ripple-linked token. Quote, Prime Trust held customer property in individually owned trust accounts. The bankruptcy estate is now trying to take assets it held in trust as custodian from a party that never received them. Customer assets held by a trust company are not available to general unsecured creditors, and we expect the courts to say so, says a representative from Swan Bitcoin. A rep from the law firm itself did not immediately respond to a request for comment, and they won't. Not yet, anyway. So here, this is the rub. That the suit is detailing that the key link between those two firms, which is where this non-public disclosure of information happened, was via a senior executive at Prime who also served as a compensated outside advisor to Swan. So here's what they'll need to prove. They'll need to prove that this guy was actually a paid senior executive at Prime, and that's easy. That's easy to do. They'll also have to prove that he was a compensated outside advisor to Swan. That's probably fairly easy to prove. Don't know yet, but, I tracking down like bank deposits, who wrote the check or whatever, however he was compensated. If it was through Bitcoin, it could be a little bit more difficult to actually prove, but whatever. The real part of this that they're going to have to prove in court is that Corey Klippstein or any other executive, or actually anybody at Swan at all, was in direct communication with this quote unquote senior executive, and that they can prove the information that passed between those two parties was in fact the information required for Swan to be able to make a decision before anybody else could to pull their money out. I'm not rah-rahing for either side. This is what they have to prove. Those three pieces of information, and two of them are most likely a lock. They can figure out that this guy worked for Swan, and they can figure out that this guy was a senior executive at Prime. It's the communication that they're going to have to prove. And if I read right, there was encrypted conversations with Swan CEO Corey Klippstein prior to meetings with regulators. Okay, if they're encrypted to get to the information that's necessary to get to, they're going to have to break the encryption. We don't know what company they were using. Were they using Signal? Who knows? But at one point or another, one of these encrypted private messaging companies are probably going to be in court alongside with them, or at least being asked, you're going to need to break this encryption. And that's going to be a whole other story as to whether or not, if it, like for instance, if it was Signal, Would Signal say, yeah, sure, we'll decrypt that for you? Because Signal wouldn't be somebody who would immediately say, yeah, sure, why not? Signal's more of the kind of company that would say, go pound sand. And then we might be looking at some kind of other lawsuit. Who knows? Now, the timing is rather suspect. However, I gotta say, let's just say that Corey Clipston, let's just say that he wasn't in communication with this senior executive at Prime. There's a lot of stuff going down in 2023, right? This was like the time of Silvergate Bank and a couple of bank closures. If I remember right, it was right. A whole bunch of stuff was swirling around that time. It was almost like an echo of the FTX collapse. Like you yell in the Grand Canyon and it takes a while, but your voice finally comes back to you after bouncing off the opposite canyon wall. Sort of like that. So there was a lot of failures around that time. What if Corey was like, I don't need insider information, dude. I can read the tea leaves. Let's get our money back. So again, it's going to boil down to what exactly was said in those communications and if the prosecution will be able to get that particular information. But right now, it's kind of be scary for Swan because $1 billion, it's a lot of money to have to pony up, man. Anyway, on to the Securities and Exchange Commission proposing tokenized stock framework as Wall Street efforts deepen. This is all according to Bloomberg, but it's out of CoinDesk and it's written by Christian Sandor. The U.S. Securities and Exchange Commission could soon introduce a new framework for trading tokenized stocks, according to a Monday report by Bloomberg Law. They reported that the agency is preparing an innovation exemption that could allow trading platforms to offer digital versions of publicly traded securities under a lighter regulatory structure. The proposal could arrive as early as this week, according to people familiar with the matter. The effort would mark one of the clearest signals yet that the U.S. regulators are warming to tokenized assets, an area where crypto firms and major financial institutions increasingly overlap. Tokenized stocks are blockchain-based versions of equities that can trade around the clock and settle even faster than traditional shares. Supporters argue that the structure could reduce settlement delays and make markets more accessible globally, but critics have warned about liquidity fragmentation and investor protections. Wall Street firms have indeed moved quickly to position themselves for this shift. The Depository Trust and Clearing Corporation, which processes and safeguards much of the U.S. securities market, said it plans to begin limited production trades of tokenized assets in July ahead of a broader launch in October, and the system that would allow tokenized versions of stocks and ETFs will be backed by assets already held within the DTCC infrastructure. Then there's NASDAQ, who is also developing a framework for companies to issue blockchain-based shares while preserving traditional ownership rights. The SEC approved the exchange operator's tokenized securities plan in March. Meanwhile, Intercontinental Exchange, the parent company of the New York Stock Exchange, has also unveiled plans to expand into tokenized stocks and crypto-linked products through partnerships and investments tied to crypto exchange OKX. The combined effort points to a broader race to modernize the plumbing of the, get this, $126 trillion global equity market using blockchain technology. What could possibly go wrong? SEC Chair Paul Atkins has signaled support for that direction. Speaking earlier this month, he said the agency is considering formal rule making for on-chain trading systems, blockchain settlement infrastructure, as well as crypto custody models as financial markets become increasingly automated and AI-driven. Atkins said existing securities rules do not fit blockchain-based systems that combine exchange, clearing, and settlement functions into a single protocol, arguing that the SEC should clarify the rules through regulation rather than enforcement actions. Well, this just brings up a general question in my mind. How far are we going to push this whole thing? And when I mean whole thing, I don't mean just tokenized securities and equities. I mean, like, they mentioned AI trading, which is going to be a thing. Okay, we've already got major brokerage houses that physically locate at least their servers as close as they possibly can to the computers that control whatever stock exchange they happen to be on. If they're heavily into NASDAQ, they might want to relocate closer so that they get literally like femtoseconds of internet speed better. They're gonna. It's not even the speed. It's like they would get the information first because they're physically located closer to the generation of that data, so they can make trades. They have just a little bit of a time, just enough time to get in their trade because they've got intelligence like a millisecond before somebody else. Now, clearly, an analyst person, a human being analyst, doesn't sit there in the screen and look at that information and make that decision because you're talking about milliseconds. These are pre-programmed trades, right? They execute. It's that it's automated. And those milliseconds in time can make the difference of hundreds of millions of dollars of trades. Okay, now we've got AI entering the picture. We don't even know what that shit looks like yet. I mean, as far as a trading bot. Sure, we've got some kind of inkling because there are some trading bots out there that are AI driven, but not to the extent that you're going to see, right? It's going to be every brokerage house. It's going to be like on the desktop of every single one of the 16,000 financial advisors for Charles Schwab. They're going to have access to this shit. It's going to be everywhere. It's just going to be a standard way of operating business. And then you've got the whole issue of AI itself outside of the financial markets taking all the white collar jobs or whatever it is that's being reported. And I'm not all that. It's not that it won't happen. It's going to be a fucking bloodbath. Let's be clear about it. I'm just saying that there's going to be some jobs generated out of all this, but let's just keep it on the level. Lots of white collar jobs going to be wiped out. Where do these people get their money? If they're like jobless, where do these people get their money to be able to buy the things from the companies that automated the very people out of their jobs? At one point or another, this circle of finance and jobs and AI starts closing where it's so tight that it cannot encompass the majority of the population of the world. That's where I'm going with this. Think of like a huge pipe that all humanity is flowing through. And then all of a sudden you come up against a valve, and that valve is getting more and more closed, and less of the water going through that pipe can flow until it's so tight that not even 0.1% of the world's population can be serviced by what's on the other side of that pipe. I don't see all of this being all that good for humanity, which brings me to the argument that I always make. How much efficiency does it take to where the population, and even like the most elite of the elite, that part of the human population, how much efficiency do you have to gain before even these guys see, oh shit? Now there's two tracks that you can think of. They don't care at all. Well, it's 3 tracks. They're really more stupid than we think. That's possible. They're just in a position of power through family name and wealth and all that stuff. Or they absolutely do not give a shit. As long as they got theirs and they can get through that pipe, whatever. Don't care. Or, and this is where the tinfoil hat comes on, this is exactly what they want. Remember all like Alex Jones and a whole bunch of other guys have been talking for years, decades, in fact, about population control and like those guide stones in Georgia. And it was written on it that they wanted like a world population of no more than like 500,000 people. I'm not saying that that's what I think. I'm just saying that that's actually, it does rattle around my head as like I wonder. But man, I don't know, man. It's AI-based trading bots and AI taking everybody's jobs to the point where how is it you don't see that if you lay everybody off because of AI, then what are you going to build to make money? Because nobody's got the money to buy what it is you build because you're building it with the AI that laid off the people that would be able to buy the shit the AI built. Why don't you just let the people build it? Give them the paycheck and you get your money back. It's like I'm sure there's some kid working at the mail room at Apple. Probably gets paid fairly well for working in the mail room because it's Apple. Kid probably has an iPhone, which he bought from Apple. And he used the money he got paid from Apple to buy the very product. Without that circularity, you get a complete fucking collapse. I don't know, man. I'm not freaking out. I'm just saying at one point or another, somebody's going to trip over the very tip of that efficiency hill and say, it's all downhill from here, man. And now we can talk about Japan. Woohoo! Their ruling party advances a proposal to build a national artificial intelligence blockchain financial system. Again, what could possibly go wrong, Danny Park from The Block? Japan's ruling Liberal Democratic Party has officially approved a new policy concept to build the future financial system using AI and blockchain technology. The proposal, titled Next Generation AI and On-Chain Finance Concept, was drafted by a project team within the LDP-led party by party member Seiji Kihara, and it was submitted to the party earlier this month. It prioritizes the development of an automated financial infrastructure that supports 24/7 agentic commerce via blockchain networks. Let's take everything that you don't know about blockchain and marry it with everything that you don't know about artificial intelligence and have children. The proposal said that in this age of agentic commerce, AI will autonomously handpick products and services instead of humans, which makes blockchain tamper-resistant, verifiable, and programmable characteristics highly compatible. It also laid out support for tokenized deposits, of course, in Japanese yen-denominated stablecoin. Regarding tokenized deposits, the proposal said that it is essential to tokenize the Bank of Japan's current account deposits. With stablecoins, the proposal highlighted the importance of legal clarity and mitigating systemic risks. It stated its support for the joint stablecoin issuance project under 3 Japanese megabanks. Additionally, the proposal called for a framework to strengthen cooperation with other Asian countries on AI and blockchain initiatives and requested the Financial Services Agency to formulate a 5-year roadmap to promote investments in the project involving both the public and private sectors. Quote, "It is truly a concept, and from here on, we will build it up piece by piece," Kihara wrote on X. "The important thing is the follow-up from now on, and we will continue to work on it." I just don't see why. I love this. It's okay. Where was it? Yes. AI will automatically handpick products and services instead of humans. Really? I'm not saying that they can't. I'm just saying, at what point do you not want to touch grass? Hell, I mean, I go into a Walmart, and over the last 5 years, or since since before the pandemic, right before the pandemic until now. So let's say, what would that be, like 6 years? Let's say 6 years. I saw like one Walmart, guy with one of those Walmart shopper carts that was putting groceries in bags for a customer that ordered online. And now, dude, I can almost barely shop at Walmart because there's like 100 of them. I mean, nobody wants to go to the store. Now, I'm not saying that I'm like dying to go to Walmart later today. I'm not exactly thrilled by the fact of big box stores in the first place, but at least there's other people. Well, and I don't care if they're the denizens of Walmart or not. At least they have a beating heart in their chest. So what are we going to do now? Do we just literally stay at home and never engage with anybody else ever, except our own immediate family? How much devastation is wrought by completely destroying all societal bonds? This kind of plays into the whole AI financial stuff and everybody losing their jobs thing. What would be icing on the cake for the tinfoil hat version of that? Make sure nobody gives a shit about anybody else, except your own immediate family and yourself. Yeah, that would be icing on the cake for that, quite frankly. I just hope it's not made with Bitcoin beans, because the Circle P is open for business. It's where I bring plebs with goods and services to other plebs just like you that want to buy those goods and services, but you will buy it in Bitcoin, because if you're not selling in Bitcoin, you're not in the Circle P. And Bitcoin beans makes chocolate, really, really good chocolate. Invest in your health like you invest in Bitcoin. Cacao is a nutrient-dense superfood. It's rich in iron, magnesium, antioxidants, theobromine, all for natural energy and mood support. We craft 1 pound blocks of 100% pure cacao, all grown regeneratively in Colombia, and you pay for it in Bitcoin. No chemicals, no fiat, no middlemen, just real food sourced with integrity and exchanged through proof of work. I still have my 1 pound. Well, it's not 1 pound anymore. I've got maybe 1/4 of a pound of this chocolate left. It is the best chocolate I've ever had. And my wife made brownies with a portion of it. And oh my God, don't go buy Duncan Hines. Find a brownie recipe, order a 1 pound block from Bitcoin Beans, and make your own brownies, because the taste, you've never tasted chocolate like this. Use Bitcoin and you will receive a 5% discount on your entire order. Use Bitcoin and as the coupon code for 5% off at Bitcoin Beans. That's bitcoinbeans.co, bitcoinbeans.co. And don't worry if you forgot, that URL is in the show notes for today's show. Back to Japan. Their extra budget is going to include funding from fresh debt, says a source, and this is directly out of Reuters. Japan's government is likely to issue fresh debt as part of funding for a planned extra budget to cushion the economic blow from the Middle East war. A government source with direct knowledge of the deliberations told Reuters on Monday. Any additional debt issuance would further strain Japan's already worsening finance and may accelerate rises in long-term interest rates. Pausing to say we're already seeing that, and we were seeing that Sunday. And this was all talked about on Monday, the day after. I don't think this is going to fly. Such concerns, however, pushed the yield on the benchmark 10-year Japanese government bond to 2.8% on Monday, its highest since October 1996, and the 30-year yield to a record top. On Monday, Prime Minister Sane Takaichi said that she told Finance Minister Satsuki Katayama last week to start work on compiling a supplementary budget, a shift from previous remarks ruling out the chance of any kind of extra budget. This extra budget will focus on funding government subsidies to curb gasoline and utility bills as surging oil prices caused by the Middle East conflict cloud the outlook for an economy heavily reliant on fuel imports from the region. While the size of spending has yet to be worked out, the decision could cast doubt on the administration's pledge to pursue a responsible and proactive fiscal policy. Quote, the about face taken by Takaichi, who had been ruling out an extra budget all along, is making markets jittery and triggering a Japanese government bond sell-off across the curve, said Katioshi Inedome, senior strategist at Sumitomo Mitsui Trust Asset Management. There's a lot of reason, this is a quote, there's a lot of reason to sell Japanese government bonds, but very few reasons to buy them, he said. Finance Minister Katayama, who is in Paris to attend the Group of 7 finance leaders gathering, said on Monday that she was instructed by the Prime Minister to minimize various risks when asked about the rise of long-term interest rates. Quote, that's something I'm contemplating, she said when asked how the government would fund the extra budget, and she did not elaborate. That's all we need. I mean, so the new Prime Minister of Japan has done an about face. They're going to pump more money into this whole thing, and it doesn't matter where the money comes from. They talk about fresh debt. They're just going to issue more bonds is what it sounds like to me, but they probably have there's some other instrumentation they can use, but government bonds is what they want, but nobody's going to buy them. Hell, the United States has problem finding buyers for our own freaking government bonds. And Japan, shit, they haven't seen bond yields this high in 26 years. It's a long freaking time. I mean, right now, I think it's screaming at like 2.9%, which is above what Reuters was reporting they were saying on Monday. I don't know, man. Everything feels sketchy and weird. It's all fake and gay. Let's run the numbers. CNBC, Futures and Commodities, breaking. President Trump has now endorsed Texas' Ken Paxton over John Cornyn in the Senate race. Ken Paxton, if I remember right, is the lieutenant governor, and he's kind of a dick. I'm sorry, but he is. He's kind of a dick. John Cornyn, however, is ancient. He is as old as a dinosaur, and he's been representing Texas in that Senate seat for, I don't know how many years. I've known the name John Cornyn since I was in high school, so there's that. But Brent North Sea is down 1 point, and West Texas Intermediate is down almost nothing, and it's standing at $108.06 a barrel. That's a high price, in case you're wondering. Natural gas is up, acting as the hedge today, 1.72% to go to $3.07 per thousand cubic feet. Gasoline down 2% to $3.69 a gallon, and Merbon crude is down 1.7%. All the metals are down because they're all risk assets, and nobody likes taking on risk when bond yields are going higher. Palladium is down 4 points. Gold is down 1 point to 45.11. Platinum is down 1.6%. Silver is down over 3% to 74.97. And copper is down 1.8%. Ag is fully mixed today. The biggest winner is chocolate, 3% to the upside, and the biggest loser is cotton, 1.88% to the downside. And then we've got live cattle. It is up 0.18%. Lean hogs are down a third, and feeder cattle are up well over 1 point. The S&P is down only half a point, which I'm really surprised about considering the carnage that's being, the havoc that's being wreaked over there in the bond market. But the NASDAQ is down a half. The Dow is down 0.4%, and the S&P Mini is down a mere 0.7%. Ladies and gentlemen, this just tells me that nobody has any place to actually put their money once they sell their stock. They don't know where to go. They're trapped. Investors are freaking trapped. Of course, you and I know where to put the money, but they won't do that because they, I guess, haven't felt enough pain yet to actually get off the stick and buy some Bitcoin. And not ETFs either. Just buy the actual damn thing yourself. And speaking of, its price is at 76,740, surprisingly resilient, again, given the carnage in the bond markets. It's a $1.54 trillion market cap, and we can get 17 ounces of gold with our one Bitcoin, of which there are 20,031,351.15 of. Fees are nominal, and there are about 45 blocks carrying 100,000 unconfirmed transactions waiting to clear at 3 sats per VByte. Low priority will get you in at almost 1 sat. Hash rate has risen since yesterday. 962 exahashes per second is what I'm looking at right now. Again, remember that is on the 1 week average, and it's all the security that I need to see Bitcoin have. And, hold on for a sec. I need to check this out. From Jack Spirko interview, that is the one that I released on Sunday. I didn't want to skip over Jub, who gave me 1,123 sats, says, it always amazes me that all the Bitcoin Sailor purchased in a week, now mostly off the market, and still no impact on price. I know, dude. I know. Well, I don't think he actually market buys his stuff. And if he does, it's like automated trades, and they're like buying like 1/10 of a Bitcoin every minute or something like that. I remember a story that I read on the show a long time ago where he specifically talked about that and said that they do that so they're not, flashing buy orders of 4,000 Bitcoin at a time, because they don't want to pay the prices that would cause him to have to pay. Because people would see that as a buy signal and go, holy shit, somebody wants to buy 4,000 Bitcoin. Next thing you know, nobody wants to sell their Bitcoin at wherever it is. They want to sell it at 10% higher. So he does he's sneaky about it. So he buys these little buys and stuff like that. Plus, you got all the idiots from the ETFs that are still treating Bitcoin like it's paper. And of course, if it's an ETF, it is actually paper, but they don't understand the underlying asset. So they're selling out. I think the ETFs and Bitcoin have lost, or crypto ETFs have lost like upwards around $1 billion this last week or something like that. I don't really know. It doesn't really matter. Let's move on, because I do want to read Dubrovko's. He gave me I don't know if he sent me any sats along with this, because I'm reading this off of my Patreon page, because it's the only place that he can give me that he can write what he needs to write, as long as he needs to write it. He says, 1, the Fort Worth Bitcoin meetup is happening on Tuesday at the Hotel Drover at the Stockyards. I won't be there, but the Bitcoin item raffle and free drink from Oak Grove is still on. 2, you reposted Jack's interview, yet cannot understand why Iran calls the extortion insurance. Jeez, David. International Core have expense codes for insurance, not protection or extortion. It makes a payment order that much easier to assemble. And 3, quote, business that only has an ATM, end quote. David cops to hitting up a strip club. I will be honest. I haven't been on the inside of a strip club since I was in college. And even then, honestly, I'm going to say it, I didn't see the point. Now, there was one time before I got married to my wife today, when I was still dating her, me and her went to a strip club together, and that was fun. That actually is kind of fun. But if you're just there with a bunch of other, it's just a giant sausage party, it just doesn't make a whole hell of a lot of sense. Okay, from the Safe of Hormuz, Great Grandman gave me 2121 sats and says, I appreciate your work. It was LNPC? Hold on. INPC with 555 sats says, may your day proceed in a pleasing manner. Thank you. I'm going to need that. Nick Dose with 215 says, cheers. To be discussed with 210 sats says, you are appreciated. Permanerd with 210 says, yo. Nostra Gang with 101 says, I like pizza. Oak Grove with 100 says, more. on Patreon. Yeah, I got it, Oak Grove. That's also Dubrovko. So just so you're not confused there. That's the weather report. Welcome to part 2 of the news that you can use. Elon Musk loses his $150 billion AI lawsuit against OpenAI and Sam Altman. I'll bet Sam is, you know what? Whatever. These two guys could fall off a cliff for all I care. Elon Musk's latest legal challenge against OpenAI has collapsed in court, clearing one of the biggest legal threats facing the ChatGPT maker as competition in artificial intelligence intensifies. A California jury on Monday rejected the $150 billion lawsuit against OpenAI CEO Sam Altman and co-founder Greg Brockman, according to NBC News. Jurors ultimately decided that Musk waited too long to bring claims accusing OpenAI's leadership of improperly profiting from the organization that Musk helped found. Jurors found OpenAI, Altman, and Brockman not liable for all claims and rejected Musk's separate claim that Microsoft helped move OpenAI away from its original nonprofit mission. That's all we need to know. This thing has been going on for a little while. I'm not really certain about the fact that the jurors were able to determine what the statute of limitations on this are. I mean, sounds rather arbitrary, but Musk has been bitching about this for like 2-3 years now. As far as when he filed, I'm not exactly sure, but there's either a statute of limitation on something like this or there is not. And I guess if there's not, then it goes to the jury themselves can decide. But again, it sounds a little arbitrary. Still, Musk lost. So, he wasn't really looking for the money for himself. He doesn't need it. He was looking to cripple OpenAI, and it doesn't look like it's going to work. And honestly, Grok is not all that great of an LLM, so let the competition begin. Over at World Liberty Financial, the treasury company AI Financial, which is a World Liberty Financial treasury company. Okay. So let's be clear what this is. AI Financial is warning that it may not survive the year. Okay. That's what they're saying. AI Financial bought a whole bunch of WLFI tokens as a treasury. So they're doing the sailor play, but with WLFI tokens. Oh my God. And this is out of CoinDesk. AI Financial Corporation's latest SEC filing shows that the World Liberty Financial Treasury Company is holding $706 million in WLFI token treasury, and it cannot sell any of it. It's a related party loan from World Liberty Financial itself. And they gave a warning that its liquidity position threatens its ability to even operate. AI Financial said it ended the quarter with $10.5 million in cash, but are recurring operating losses and a $5.5 million working capital deficit raise. Substantial doubt about its ability to continue as an ongoing concern within 1 year. The company holds 7.28 billion WLFI tokens, and that's down from an acquisition cost of $1.46 billion while generating just $4.7 million in quarterly fintech revenue. All 7.28 billion tokens were contractually locked as of March 28th, according to the filing. The company said 3.53 billion tokens are non-transferable for 12 full months, except for limited collateral staking and lending uses, while the larger 3.75 billion tranche is also subject to additional shareholder approval, charter amendment, and resale registration conditions before they can release any of those. In other words, the company's largest asset cannot be sold while it warns that it may not survive. Formerly known as Alt 5 Sigma, the company changed its name in April. It runs a fintech business of crypto payment processing and related services while maintaining a significant token treasury acquired through a $1.5 billion financing round in 2025 tied to the Trump-linked World Liberty financial ecosystem. World Liberty Financial recently approved a broader plan to unlock over 62 billion tokens held by insiders and early supporters over time. However, AI Financial $7.28 billion token treasury remains subject to separate contractual lockup restrictions. In January, AI Financial borrowed $15 million from World Liberty Financial itself, receiving net proceeds of roughly $14.2 million after prepaid interest and expenses. God, the collateral was WLFI tokens, according to the filing. If the borrower defaults, the filing states that the entire pledge collateral is forfeited back to WLFI. What adds even more complexity is how both companies share executives, making the counterparty to the loan a related party. Holy shit. AI Financial Chairman Zach Witkoff is World Liberty Financial CEO and co-founder. Board member Zachary Folkman is also a WLFI co-founder. WLFI itself owns 1 million common shares in AI Financial, plus pre-funded warrants for 99 million more shares and warrants for another 20 million shares, a position equivalent to roughly 46% of the company's fully diluted equity. The company also disclosed material weaknesses in its internal controls, and then they talk about a little bit about Kraken and blah, blah, blah. But the real story here is that both of these okay, so first, you're a treasury company, and instead of buying Bitcoin, you bought WLFI tokens. But you've got them locked up, so you are sitting on an asset that is illiquid. 100% from end to end, illiquid. You can't move it. You can't do anything with it. You can't really borrow against it. I mean, there's a little bit of borrowing that I guess they can do under certain circumstances, but as far as it looks here, their entire treasury, their entire treasury is unavailable. And then they take a loan in cash against those tokens, which is, I guess that's the one kind of loan that they can make, right? They can make that loan because the tokens are owned by WLFI, or they're at least that's part of that company. How to say this? The AI Financial owns the tokens because they bought them. They borrowed against those tokens to get a cash infusion from the very people that minted those tokens. And those two companies share executives. Elizabeth Warren is going to have a field day, and so is Bernie Sanders. This is an unforced error. This is what I'm saying about ethics. This is why people go, I can't believe you're calling Trump unethical. Unethical doesn't mean that you're a bad person. Not always. Okay? Because ethics and morals are kind of different. Ethics are rules. Morals is something deeper inside the human spirit. Ethics are just shit you write down. It's a contract. It's an agreement. Hey, you broke rule number 5, you're unethical. Because you're technically unethical because you broke one of the ethics rules. That's all it means. It doesn't mean that you suck. It just means you broke a fucking rule. You know, moral is something like don't kill children or don't kill humans. That's deeper seated. That's something that we know is truth from somewhere other than a court of law. That's the difference between these two, right? The reason that Senator Warren and Senator Sanders are going to be able to walk all up and down Trump's ass, because he is going to lose his ass in the November elections. The writing is on the wall. And it's not going to be pretty for the next 2 years of Trump's administration. Because this shit is an albatross hanging over the Trump name that they can play with ad infinitum. And it's an unforced error. There was no reason for Trump to do this. I don't believe the man or his family was hurting for cash. They didn't need to take on this kind of ethics risk. And by the way, the fact that they did this, in my opinion, really has nothing to do with what's moral or not, because that's a different boat. This is all about ethics. And ethics are fairly fucking clear when it comes to politicians. This is why all of us are looking at Nancy Pelosi and saying, you're an unethical bitch. Because she is. I'm not making a moral judgment about Nancy Pelosi. I'm making an ethics call. It's balls or strikes, man. And this is an unforced error. They didn't have to do this. And this thing is going to come back and it's going to haunt Trump for the remainder of his presidency. And it would, honestly, even if the Republicans swept everything again, which is not going to happen, and that's just, I mean, shit, statistically, you can look at that, and it never happens in midterms. Whoever owns everything in the midterms loses a lot in the midterms. That's just the way it goes. It doesn't matter who the power was held by. Was it red team or blue team? Doesn't matter. It always happens. The Republicans are going to at least lose the House. And they may actually be looking at losing the Senate by 1 or 2 seats. And they'll still retain the presidency. But with this kind of thing hanging over Trump's head, I don't know, man. This is starting to look really messy. And the messier it gets, the more Warren and Sanders can rub their little mitts together and say, we got him. It's all stupid. And so is this. Just as a reminder before we get into our next story, this is Eric Balchunas, who's reminding us of shitcoinery. Stop doing it. And that includes if the shitcoinery is based on ETFs. Because Eric says a slew of baby 2X ETFs closed in April, most under 1 year old, including Lambo and Rekt, REKT. They can tell early that no one cares, so they just pull them. Still, though, the closures are dwarfed by the dozens of 2Xers that launch every month. So, yes, once iBit and the rest of the Bitcoin ETFs came in, it opened the door for a bunch of little guys to come in and say, hey, we're ETFs too, except we're doing it with Lambo token or Rekt token. And he's saying that it's like, he's got like 20 on this list. There's like 20. There's Lambo, there's Doge, there's Inpex. There's all kinds of shit coins represented in these ETFs, and they've all gone away because no one cared. It's almost as if the shitcoin crowd keeps trying to resurrect the zombie. It's just not working as well as it used to work. And I wanted to use that as a preface before we talk about TD Cowen raises strategy price target to $400, citing faster Bitcoin accumulation and accretive deleveraging. So we go from the very, very small shitcoiners to somebody who's got a metric shit ton of Bitcoin. This is out of the block written by Naga Avan Nomeo. Cowen raised its price target on strategy to $400 a share from $395 on Tuesday, citing accelerating Bitcoin per share and a balance sheet action the firm called a clear and positive for both equity and credit holders. The note, authored by analyst Lance Vatanza and associate Jonathan Navarrete, maintained a buy rating on the stock. The $5 target increase was driven by upward revisions to TD Cowen's 2026 BTC yield and BTC dollar gain estimates after treasury activity since the last earning call surpassed earlier models. That's all we need from this particular story. So we've got the bond market. I don't know how to say it. Is it a dumpster fire? Because it looks a lot worse than just a mere dumpster fire. Dumpster fires are relatively contained. They don't really set off any other fires because the majority of the fire is contained within steel walls and at least mostly lidded, right? This looks like a forest fire, the bond market right now, which is igniting all kinds of other shit. You got Iran going on, you got Strait of Hormuz closing, you got the possibility that they're going to take tolls in Bitcoin with their insurance program, whatever. Some of the things that I'm seeing coming out of Israel right now is bizarre. And I don't even want to get into that because I saw two things today that I was like, I can't even believe this is the world I live in. So hopefully it's what I saw was actually fake so that I don't have to really deal with the reality of what I heard. But it was so fucking insane. I couldn't stand it. So I'm not going to bring it to you. And I'm not saying that I hate Israel. I'm just saying the shit that I heard from some of the top Israeli officials made my mind kind of go, Anyway, with all this crap happening, here comes TD Cowen and says, dude, Bitcoin dollar gain, we're going to raise that a little bit. You know? I mean, sure, it's only from $395 to $400. I get that it's just a $5 increase. But we've seen a depression in Bitcoin prices because yield on bonds are screaming. We've got war in the Middle East that's fucking up Japan to the point that they're actually talking about just printing some money because people can't afford gas in a nation that holds the majority, well, a lot of U.S. debt. We're really good friends with Japan ever since the end of World War II. And yet that entire nation is so dependent on imported energy. And then we close the Strait of Hormuz. And I'm not talking just we, Iran also is part of it, but it's the whole U.S., Iran, Israel thing that's going on in the Persian Gulf. It was open before. Everything was just fine. I mean, I don't want Iran to have a nuclear bomb, just like nobody else wants them to have a nuclear bomb either. But this is how you pay for it, I guess. So Japan has been selling United States bonds, which isn't helping our bond yields. Japan's bond yields are out of control. They want to print more money, which is not going to help those bond yields. People are going to say, oh shit, I'm going to not get diluted out of my treasury position, so they'll just sell that shit. That's going to cause the Japanese bond prices or bond yields to increase even further. It's like a debt spiral. I mean, they kept talking about the mining death spiral. I'm looking at a treasury death spiral. UK bonds are out of control. US bonds are out of control. Japanese bonds are out of control. After that, ladies and gentlemen, there's not that many bonds out there that people really give a shit about when it comes to tracking global economy. And it's all on fire. And TD Waterhouse or TD Cowen is like, yeah, dude, we like companies with a shit ton of Bitcoin. You might want to pick some up in case it catches on. Finally, for the day, Wallet Cluster earned $2.4 million with a 98% win rate on Polymarket military bets, according to something called Bubble Maps. And this is written by Zoltan Vardai out of Cointelegraph. Blockchain data platform Bubble Maps. I love that name, Bubble Maps. Said that it identified an entire cluster of Polymarket wallets that collectively earned $2.4 million with a 98% win rate on contracts tied to U.S. military operations. 9 wallets, placed all their major bets just before major military developments, including the February 28th attack on Iran, the killing of Iranian Supreme Leader Ayatollah Ali Khamenei, and the U.S.-Iran ceasefire agreement, Bubble Maps wrote in a Monday X post. The accounts were all funded through centralized cryptocurrency exchanges in a tight time frame and made some minor losing bets on February the 20th, which likely served to, quote, avoid attention, according to Bubble Maps. 4 of them each made around $400,000 in profit on their bets that the U.S. would strike Iran on February the 28th. The investigation highlights the growing insider trading concerns tied to decentralized prediction markets like Polymarket and Kalshi. It aimed at curbing insider trading on prediction markets. While the data platform doesn't have definitive proof that the accounts did indeed belong to insiders, The on-chain trail is symptomatic of someone with an unfair informational advantage. Nicholas Vyman, the CEO of Bubble Maps, told Cointelegraph. And he also said, quote, "We cannot say with certainty that this was an attempt to hide, but it is suspicious that funds were routed through centralized exchanges and third-party services before funding new Polymarket accounts, effectively covering their tracks." So it's also a little bit of money laundering. U.S. lawmakers previously proposed new laws to fight the growing insider trading concerns. And they talk about March the 10th, where the Democratic Party Senator Adam Schiff introduced the Death Bets Act, so you can't bet on somebody who's going to die. And see the bill. See, is there anything else? Yeah, and then they talk about Gavin Newsom basically banning all of the California government from participating in anything like this. So here, the big part of this is that it appears that there's 9 wallets that are all very similarly traded, which means that they are either all owned by one person, because they're clustered together by their percentage of wins and the timing of their bets, right? So the cluster represents several different pieces of information that were correct, and they all had to happen at particular times, right? So from that standpoint, you can cluster those wallets together because they were all making the same bets around the same time. Doesn't matter the same amount of money, but it does matter on what they were betting on, what the market that they were betting on. So these 9 wallets are all tied together by either being owned by one person or several individuals that all know each other, or several individuals that are all privy to the exact same information. And it's all about when the U.S. military was going to do something. This is Pentagon. Well, it's either Pentagon or it's somebody that is national security that's attached to the Pentagon, or it's directly out of the Trump administration as far as anybody who knew what the hell was going on. This isn't organic. And again, if they tie this back, and they being Warren and Sanders and a whole cluster, and let's just throw AOC in there for good measure, because she hates Trump too. All the Democrats do. If they can tie this with evidence back to anybody inside the Trump administration, it might as well be tied to Trump himself, whether he did it or not. It's not going to matter. Again, unforced errors are everywhere, and they're all coming right before the midterm elections, and I just don't understand it. And sometimes it makes me wonder if the people at these levels, and I could include Obama in this, I could include Joe Biden in this, and I can include Trump in this, and probably more than that, but at least these 3 last presidents, as their administration, basically their administration is what I'm talking about. It almost seems like they just don't care anymore. I'm not talking about the people, the presidents themselves. I'm talking about the administration, which means everybody under them. Everybody. The people that work at the White House, the people that are cabinet members, blah, 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 all those guys. It's almost as if they don't care. That the health of the nation's population is not their primary concern, to the point that it is now that they don't even care to hide it. I would consider these as grave errors at any other time except for now. Now, I think it's just that they just don't care to hide it. They're just lazy enough to say it's not going to matter. You can catch me with my dick out, pissing in the wind, and take a picture of it and put it on Twitter, and I don't care. I'll still be able to say it isn't me, and everybody will believe it because nobody cares. That's sort of the way that it feels. So between unforced errors, a bond market that is incinerating itself, it's going to, it's Tuesday, ladies and gentlemen. Welcome to Tuesday here in the United States. I don't know what else to say, so I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.